Is a January rally from major indices losing steam? This is your MacDesk Floor Report for Thursday, January 31st. I'm Rebecca Darst from the Market Access Center, bringing you the latest market action from the world-famous floor of the New York Stock Exchange. We are down 18 points in the Dow Industrials and about 2 in the S&P as we close the book on a month that has tacked on nearly 800 points to the Dow Index. While it's not a surprise to see some pairing of positions on that run-up, we're also trading ahead of a big jobs number, the January read on non-farm payrolls, which means the market is taking some cues from option traders in the weekly S&P Spider. We'll have more on that in a minute. First, let's recap the overnight action. Asian indices closed in flat to mixed territory, with Japanese manufacturing PMI coming in a little higher than expected, but growth in industrial production falling short for the month of December. Strong bank earnings drove Nikkei financials higher on the session. European stocks were mostly lower on some generally disappointing corporate earnings. We had a slight downtick in the German unemployment rate, but this weighed poorly against worse than expected December retail sales from that country. Here in New York, weekly jobless claims came in higher than market expectation at 368,000 new claims, although we also got word of a 2.6% increase in personal income for December. Just ahead of the 10 o'clock hour, we had a big beat in the Chicago Purchasing Managers Index for January, which came in at 55.6. Market consensus was just over 50, although the December reading was revised lower by a couple of full points. The Dow and S&P set their respective intraday highs within about 10 minutes of that number, but we've since given up those gains as market traders position for a heavy slate of data releases tomorrow. We have the January read on non-farm payrolls due out tomorrow morning at 8:30. Bloomberg's survey of economists calls for a positive change of 165,000 payrolls. The prior release was 155,000. Ahead of that number, we're seeing buying interest in weekly puts on the S&P. This is ticker SPY, trading just below a reading of $150 per share right now. Short-term bears on the S&P are buying close to the money puts at strikes 149 and 150 in the February 1st and February 8th weekly option contracts. Again, that's bearish or defensive positioning. Traders either expecting the jobs number to miss or possibly just looking to protect gains in the event of some volatility to close out the week. Looking ahead to what's in store for next week. On Monday, we've got the February European Centix Investor Confidence Survey coming off of a very bearish reading of -7 for January. Consensus calls for a slightly positive read of 0.7. A UK survey of construction purchasing managers for January. And here in the US, we've got the January ISM reading of current business conditions and December US factory orders. The prior reading was flat. Again, consensus calls for a slight lift to 0.9%. And earnings season continues to plug along with reports from Cisco and Yum Brands, a couple of REITs reporting, that's Simon Property Group and General Growth Properties, Humana, Edwards Life Sciences, Hartford Financial, Anadarko, and Royal Caribbean. On Tuesday, we'll be looking at a raft of January PMI services numbers from Italy, France, Germany, the UK, and the Eurozone composite, along with December Eurozone retail sales and a January read on Italian inflation. Earnings are due out from Disney, Kellogg, Aflac, Cardinal Health, Estee Lauder, NYSE Euronext, Kimco, Genworth Financial, Archer Daniels Midland, and Diamond Offshore Drilling. Next Wednesday, we've got some data releases out of Japan in the form of January official reserve assets, December machine orders, and the weekly domestic and foreign stock and bond buying. Canada's IV Purchasing Managers Index for January is due out, along with February MBA mortgage applications here in the U.S. Visa, Akamai, Allstate, Prudential, CVS, Time Warner, Ralph Lauren, and Tesoro are a few of the companies reporting. On Thursday, we'll be looking at the Japanese Composite Index of Leading and Coincident Indicators for December, some trade balance data from France, German industrial production, UK production and trade balance data, and rate announcements from the ECB and the Bank of England. U.S. data includes the weekly jobless claims and Q4 non-farm productivity and unit labor cost data, along with earnings from Starwood Hotels, KKR, Teradata, Cigna, Sprint, and LinkedIn. We'll finish off the week with a heavy day of data releases from Japan, December housing loans, trade balance, current account and bank lending, and the January Economic Watchers survey. European issues may move on December trade balance and current account data out of Germany and a read on January business sentiment from the Bank of France. Several releases are due out from Canada on housing starts, merchandise trade, and their January jobless rate. While ahead of the U.S. Open, we'll be looking at December trade balance and December wholesale inventories, along with earnings from AOL, Moody's, Cincinnati Bell, and Apollo Global Management, to name but a few. We will be tracking the action as it happens from right under the Bell podium here on the trading floor. Until next week, I'm Rebecca Darst for the MacDesk Floor Report.